Hello everybody, so a quick video today only dedicated to CleanSpark because I want to finish my video from yesterday and tell you kind of how I value CleanSpark and why I do a sum of the parts analysis and why I find that CleanSpark is actually pretty undervalued in my view. So let's get started. So today's valuation for CleanSpark as of this morning is 2.57 billion, right? And keep in mind this is enterprise value, so it takes out debt, right? It penalizes the company for debt, so that's a fair metric to use compared to a market cap. So we need to explain these $2.5 billion. We need to explain them with what we have on the balance sheet, with what's the tangible value, right? What's the margin of safety when you buy CleanSpark, which is what is going to allow me to tell you what I think about it, which is I think it's cheap. So they had last report, but keep in mind that was well over a month ago. Last report, they had 7,082 Bitcoin. I think today they likely have probably 7,500 Bitcoin because they've been mining for what, 6-7 weeks since they reported that, so probably even more than that. So if they have 7,500 Bitcoin at 60,000 of Bitcoin, granted it dropped a little bit this morning, but let's assume it's 60,000 roughly, right? That would be exactly $450 million of Bitcoin that they have on the balance sheet right now, and that's 17.5% of 2.5 billion, i.e. 17.5% of enterprise value. So that margin of safety is already there when you pay that price. So we subtract that, right? That's kind of safe. They own that, right? It's the part that's a leveraged play already. It's a leveraged play already on the Bitcoin. Now, the mining hardware. You see, one of the things to understand about mining hardware is that the price of mining hardware is highly correlated to the price of Bitcoin. Per my estimate and per what I see, this is an excerpt from Bitcoin magazine. You can see when the price drops, for example, for 14% for Bitcoin, the miners drop anywhere between 12 and 23% in value. So I would say the correlation is something like a 0.7 or 0.8. If they're newer miners, they are maybe a 0.9, right? That's roughly what I would say. It also depends on the fees, so it's tough to know the exact correlation. And of course, 163,000 miners. CleanSpark has different generations of miners, but they're all very new machines, and they are their teams too that update the machines, right? If you read the report, you know they explain how they can make these machines go mine 15% more Bitcoin. So these machines might actually be a little more valuable. It's all very market dependent, the value of these machines. But anyways, when I use the Bitmain price, right? The Bitmain's price advertises $6,318. That's what they advertise. But they're sold out, of course. And you got to wait until Q4 or Q3 to get them. And I doubt you can get them in Q3. They're sold out. Look up miners, try to buy one. Resellers have them. Good price at the main company manufacturing the stuff. No, it's sold out. So if you do a map of Mac in math, let's assume that they get 6,300 per Bitcoin. You may think it's optimistic. You may think it's not. Feel free to adjust that based on what you think. 163,000 S21 miners. Think about how many miners that is. 160,000 miners. That's 1 billion. 1.032 billion, of enterprise value. So the enterprise value of CleanSpark is 2.7 billion. They have 450 million of Bitcoin, so 17% is Bitcoin itself. 40% is the hardware, the mining hardware, 40%. So if you add the two, really 57% of enterprise value for CleanSpark is made out of either straight Bitcoin or Bitcoin derivatives. And, to me, that's a pretty safe play because a mining equipment, that's pretty marketable. That's a pretty marketable thing. And sure enough, these miners often resell them. And, they can sell them abroad, right, to countries that have even cheaper access to electricity than, say, a CleanSpark. Now, let's continue this. So we said 450 million more for Bitcoin, that's 17% of enterprise value. $1 billion of mining hardware equipment, that's 40% of the enterprise value. And then what's the third thing that they own? What's the third big item they own? Well, it is industrial property. And I'm not counting the New Deal, by the way, that they did recently. Keep in mind, they increased that. They're acquiring a failed Bitcoin miner. I didn't include that in there for the sake of simplicity. But let's just do this. They have $4.8 million of square foot scattered in the middle of the United States. You know, they have some in Mississippi. They have some in Wyoming. Kind of remote locations, but valuable locations because they have cheap access to electricity. So I'm going to take this. This is from Wakefield and Cushman. This is their data. I'm going to take the cheapest industrial property you can find right now. Seems to be Memphis at $60 a square foot. And you know, I'm being a little mean to them. I'm sure their property might be worth a little more at $60 a square foot, especially the Wyoming one. But anyways, let's assume it's $60 a square foot. They have 4.8 million square foot at $60 a square foot. That is $288 million worth of real estate, of industrial real estate, and that's 11.2%. Right. So the total is what? The total is 68.85% of the value of CleanSpark can be explained by A, the Bitcoin they own, B, the rigs, the miners, the hardware equipment, this computing equipment, that's 40%, and then 11% is the industrial property for a total of 69% of enterprise value is explained by tangible things. That's what it explains by. And, you know, keep in mind too, and this is important, this was the point I made in my last video on the topic, is that I'm using industrial property to assess the value of those plants that they have, right? But I could have used data center as a comparison, right? If an analyst were to use data center as a comparison, the value of CleanSpark would be much higher than that. You know, and you may say, well, data centers, they need to be close to, you know, good optic fiber. They need to be close to good communication. Well, that's the old type of data center. But, you know, we know that in the new data center, you don't need a very good internet connection if all you're going to do is AI training. If you're going to train an AI, right? If you do inference for millions of customers, yes, you need to be in a well-connected location with a good internet connection, and of course, being in the middle of Wyoming might not work. But if you're using a data center just to do inference, you know, the AI just runs for like days and days and days and comes up with a model, you don't need any good internet connection, which is also kind of a turmoil that I think is happening in the data center space where a lot of these big tech companies, they're going to be seeking property where just the cost of electricity is cheap and where they only care about the cost of electricity, and that's for their inference part of the business, for their training, for their compute training part of the business. They don't need a good location. The inference part, they still need a good location. So we kind of have a split in the data center market where the data centers in the middle of nowhere, in my view, will become much more valuable because you need it for training purposes. Anyways, back to this. So 69% of the value of enterprise value of CleanSpark today can be explained by the Bitcoin, the mining hardware, and the buildings. That's 69%. What does that mean? That means that if Bitcoin rises by 45%, i.e. if Bitcoin were to be at $87,000, there would be no premium on the stock. There would be no premium on the stock on the value of the stuff that they own, because if Bitcoin rose to that level, well, the Bitcoin and the miners would themselves be worth all of that enterprise value. And that's why we say, most people who analyze CleanSpark look at CleanSpark and say, well, this is clearly a very leveraged play on Bitcoin, because what is it that happens if Bitcoin shoots through 87? What if it shoots through 100K? Well, then you're going to get a multiplying effect. And, you know, this company might be trading at a discount at some point. Right now, it's trading at a little bit of a premium to the stuff that they own. A premium to the stuff that they own. That premium is 31% of enterprise value, or $798 million. That's that premium, 31%. But for 31%, for $798 million, you get what? You get the astute management, You get the contracts that they've negotiated with Bitmain, the miner, and they have these contracts negotiated until 2025, right? They have 50 exahash coming up. And you get those contracts with the electric companies at these very cheap electric rates. Remember, they pay less than 5 cents, 4.8 cents is what they pay for electricity. That's very valuable for per kilowatt hour. You get their employees. You get private jets that people keep criticizing CleanSpark for. Yeah, they spent 12 million on private jet. Well, guess what? They live in the middle of nowhere. These data centers are in the middle of nowhere. So I guess the executive think they need that. Doesn't really matter, right? But you also get the earning potential, which is why it's wild, because I haven't even included that, right? The total 2.5 billion EV could be justified just by their economic profit, how much they make. And, I'm going to use the term economic profit here. Why? Because this is a company that has a lot of amortization, a lot of depreciation. And so on paper, it looks like they make no money because they depreciate the value of the miners because, accounting is kind. And it's got these great rules. And so they end up paying very little taxes. But the point is what? So they mined in Q2, right? Last report, they mined $104 million of Bitcoin. The cost to mine this 104 million of Bitcoin, that was 45 million. They paid 45 million in electricity, 17 million in labor and employees, and in OPEX essentially, and then 4 million in fees. That 4 million in fees actually might be very well going away because they were changing their auditing firm. So what was the profit? So 104 million minus 45 million of electricity, minus 17 million of employees, 4 million of fees. Their profit for the last quarter, economic profit, right? Not what accountants look at, right? Not the income statement. Depreciation is not a real expense. Anyways, the point is it's 38. Sorry, Warren Buffett, and Warren Buffett calls EBITDA earnings bullshit. I don't. I really fully think depreciation is not a real expense. Anyways, $38 million for the quarter. That's yearly profit. If we do a 4x on that's $152 million of economic profit, of what really matters. So let me make up this ratio, premium to earnings ratio, i.e. we remove all of the tangibles that we can sell in the open market today. We remove those. We just save a premium. Premium to the earnings ratio, it's what? It's 798 million. That's their premium, divided by their yearly profit, so 152 million. That means this stock trades at 5.25 times its economic profit. That is dirt cheap for a company, which if you look at what analysts predict, they predict they will grow revenue by 75% over the next 12 months. So if the stock doesn't budge and they really grow revenue by 75% over the next 12 months, you're going to have a stock trading at a premium to earnings ratio of a 2.5, a 3. And let's even forget my creativity, right, on the valuation ratio here. And let's use a more accepted valuation ratio like enterprise value to earnings ratio, right? EV to earnings, the better PE in a way, because you penalize firms for the debt by using enterprise value and not using market cap. So the better price to earnings ratio, right? So that would be 2.57 billion. That's the enterprise value. You divide that by their economic profit, 152 million, and you get 16.9x for a company still predicted to grow at 75%. So that is cheap in any world. That is just cheap in any world. And this company has so many intangibles. It is unfair. It is unfair in my view to just counter Bitcoin like that in there. It's very unfair. Because, like I said, it's a leverage play. Some people buy leverage ETFs on Bitcoin, right? They just take the leverage on Bitcoin and pay interest. No, well, you don't need to do that. There's actually something tangible behind it, right? It's unfair because, like I said, 1.46 billion of the enterprise value is either Bitcoin itself or correlated to Bitcoin. And the 288 million of industrial property, it perhaps arguably could be correlated to something even better than Bitcoin, which is industrial property linked to cheap electricity. Understand AI, understand big tech firms being on the lookout for that cheap electricity. So if you were willing to pay just 16 or 17x, you could see the Bitcoin, you could see the miners, you could see the contracts as just the cherry on the top of the cake. That's really, you get that thrown it for free if you just buy the stock just for the earnings potential. Of course, this is no investment advice, no financial advice, none of that. And this is where I'll conclude my video here. on CleanSpark, a little bit of innovation and valuation. What is the value of CleanSpark, or what is the value of a miner, right? If it were to be bought out just so that a company can save money on electricity. And so if you assume a company right now is paying 10 cents a kilowatt hour, if you assume a big tech firm is paying 14.8 cents a kilowatt hour, and you assume they want to save 10 cents, so what do? They want to sell 10 cents on their compute, right, on their AI training costs. Well, they could very well buy a data center from CleanSpark with a good contract. And if they bought all of CleanSpark, theoretically, that would mean a saving of $520 million a year if you were paying 14 cents a kilowatt hour in your prior data center. So each penny that you would save by accessing the cheap electricity of CleanSpark, each penny saved would correspond to $52 million a year. And if you want to go back to my valuation, I go how I get to that number, looking at the almost 600 megawatts that they pump off the grid to run these miners. My prior video has that coverage. So, in conclusion, title of the video was how cheap is the stock? Well, the stock is very cheap. I'm buying the stock. I bought a little more this morning. You do whatever you want, but I love this company. So this was not investment advice, no financial advice. This is just entertainment. I hope you like the video. Please like, please subscribe, and I'm ending this before my computer stops me. Thank you for watching.